All right, traders, this is Blake Morrow. You are listening to the Morning Edge. Oh, it's the Face 2.0, but I'm calling it the Morning Edge because I'm bringing back the Morning Edge. That's all there is to it. Stelios is here today as well, but what we're going to do is we're going to cover a few things before we get into the bias chart. Actually, we're going to go through the bias chart. Obviously, one thing I want to point out is, obviously, I think the cable's done a false breakout. If you guys aren't aware, I bought Euro Sterling. I do think that this was a false breakdown below a major support level, and I think the Euro Pound, as soon as we get back above 86.30, I think it's going to be a pretty bullish indication. That's what I'm adding. I've got a small position. Excuse me, I got a small position already. I want to add on a move back above like the 86.30, 86.40 level. I just want to know that the pound is really, showing some signs of weakness. Now, I want to also point out a couple other things really quick before we get into the actual, different pairs. Look at what happened with equities this morning. Here's the equity markets. Here's the S&P really quick. You're right up against previous support, current resistance, and it was looking like we're going to break higher. And actually, you look at the intraday right here at the 15-minute chart, looks like it's going to break higher, and then all of a sudden there's a rug pull. Okay, the market just slipped. NASDAQ, similar situation, right? You can see it right here. Market looked like we're going to break higher. Dow. Same thing, right? Now, the reason why I point this out is because what the characteristics that we've seen, at least in recent weeks and months, and is just the opposite of that. You would see like, false breakdown, false breakdown and a reversal higher, right? When you start getting them in the other direction, you have to start going, hey, wait a second. Why are we getting them in the other direction? Is it just, are we, more or less range bound, or is it a change in trend? Well, right now, I think it's more of a range bound. So we need to be aware that, we're starting to see false breaks, not only on the downside, but also on the upside. And we actually saw it in some currencies too. I mean, look at the dollar MEX. Dollar MEX hit new lows below the 50% retracement. And then boom, we bounced like a bat out of hell. Dollar Norwegian krona, you can see this little false breakdown right here. And then boom, we bounce up to the highs of the session real quick. Dollar Mexican, I just pulled up the dollar Mexican peso. Dollar Canadian, new lows, right? New lows, and then all of a sudden, boop, we're squeezing past the highs. Now, we might have got a false breakout at the highs too. But what I'm trying to show you is there's interest at these levels for two-way price action, and that's important because the one-way price action is what we don't want to see. I don't want stocks to continue to just grind higher because it makes life really difficult for all of us as traders, because you just don't get any pullbacks. You just grinding, and then there's no volatility. That means there's very little room for error when you're wrong, when it's just a grinding market. So when you get two-way price action, you can have a little bit of error on your entries and still manage to squeak out a profit, and not or minimize losses too, which is equally as important. So anyway, that's just kind of the dynamics that I'm seeing for today. Now, obviously today we have Fed Chairman Powell. Expectations is right now for the market is he's going to deliver the same answers that he did yesterday. Everybody knows what to expect. It's pretty, black and white. I mean, when I say black and white, it's, everybody knows what to expect from Powell. He's going to be dovish. He's not going to be hawkish. We don't have to worry about rates. Inflation is transitory. That's it. That's it. That's it. Nothing new, nothing more. That's it. Now, the okay. So one of the things that I think we should be aware of is this, that we just have, this very much we have complacency heading into a second day of Powell's testimony. And if there's something that could shake the trees of the market, it would be something that he could say today, that the market was like, wait a second, what did he say? And then, take note. So let's go through the charts and let's figure out what's important. And I guess one last thing that's really important, obviously. I mean, look at the 10-year. It's screaming higher. Here's the 30-year. What point do stocks actually take notice of this? I mean, I think they're already starting to, but man, this is a big rally in yields. When does the market force the hand of the Fed? Stelios, you were talking about a move to 150 in the 10-year. Why does the market care at 150?
It's just that it's if you look at the daily or weekly chart, it's a big resistance zone between 135 and 150, and if that breaks, then it takes out previous lows which had been support, now they're resistance, and technically it's a break, and it's an important one. That's why I think 150 daily close above 150 is I think is going to be the beginning of the move.
Okay, then and it's good to point out that it's technical too. I mean, this is previous support from back in 2019. So basically what the 10-year is telling you is that the market is returning back to 2019 levels. So do we need excess liquidity now? Shouldn't we start tapering? That's what the market's saying, right?
Yeah.
Yeah.
Yep.
Okay. All right, guys. So just keep. I guess what we should do is I should probably put the alert here because I got to start getting notified when we get really too close, right? Because we're already at it. So let's go above that a little bit. There we go. Okay. All right. Let's get through these markets. Because the stock market's going to open shortly. So the euro actually turned lower pretty aggressively. Now, am I bearish to the euro? No, I really have no desire to trade the euro at the moment. We can write down, 121.80 is resistance. Okay. I guess support's going to be right here at 120.90. I'm really, really not excited about the euro at all. So 120.90, 121.80, and it's in a range. Sterling, I know it's bullish. I agree. I think it's going to come off. I think it's going to pull back. I don't disagree with you if you go, isn't it bullish, Blake? Yes, I believe it is bullish. I also believe that near term, we're going to do this. Right? So even though I'm going to have to designate this as being bullish, I think we have to consider it that it's going to probably pull back a little bit, especially if we start taking out some of these lows, some of, this like these, well, we're already taking out this trend line, but some of these like lows and start making lower lows. So for today, what's going to be important is going to be this low here at 140.55. So 140.55. Now think about all the people that bought it at 142.50 last night. They're probably like, oh, geez. So now any rally to 142, not the spike high, the rally to 142 is going to find sellers. So, okay, because the people got sucked into it last night and they got sucked in at bad prices. Let's face it, right? Aussie. So the Aussie dollar, we are again, nearing the 161% extension. We have to stay bullish while we're above. Well, we have to stay bullish while we're above 78.20, but 78, you got 78.50, 78.20, same as yesterday. 78.20, 78.50. And I think this one's going to be important. So I'm going to put an asterisk there. It is bullish. 79.76. Okay, and you know, I do think it's getting a little tired up here, but relative strength is already, you know, kind of moderated. But I think we also got to pay attention to the recent highs at 79.50, 79.48. But I'll just write down 79.50. Okay. All right, and Kiwi screamed higher. You know, growth forecast upgraded. You know, Kiwi just squeezed. It's playing a little catch up to the Aussie. You can see the reversal in the Aussie New Zealand lower highs now, so that's pretty important. That's one of the things that's also keeping a cap on the Aussie, in my opinion. All right, so right now we have to just say 73. You can see 73 cents right here. I know it's below the breakout point, but 73 is uber important now. That has to hold for the bulls, and we have to imagine it will. So next resistance is 74.55. I'll have to write 74 cents, but I mean, we're basically there. So I guess I could 74.55. Okay. Dollar Canadian. So the dollar Canadian, we hit, you know, 125.55, then bounce back up, but we can't even get over 126. We definitely need to get over 126.50 for it to turn. So I'm just going to write down 125.50, and considering that we continue to go lower, I have to put it on bearish for today, unless we can break back above 126.50. I'm sorry, this is 125.50. It's 125.50. So unless we can get back above 126.50, I have to designate it as bearish, because what's happening here is we were holding up pretty well, and then as of yesterday, we're just, you know, plucking at lows. Now it's not making any significant move, but it's enough to where I just got to keep it bearish right now, especially with the Aussie and Kiwi making their moves. Now, flip side to that is the dollar Swiss. This is bullish. I've taken half of my position off, just so you guys know. Support should be any dip back down to 90.25. And this is bullish. And I know you're like, wow, that's, you know, a dollar pair that's bullish. Yeah, it's actually above this downsloping trend line. And, you know, 200-day moving average is next, and that comes in at 91.50, basically. Okay. Dollar yen. The dollar yen, I mean, this is, we should actually be bullish here. I know I've been putting it kind of on neutral the last couple of days. Look, we held the 618. And Dale thinks there's a 3 drive here, you know, 1, 2, 3, which could very easily be the case. So resistance at 106.25. Remember, this is a confluence too. Just if you guys missed this, just let me point it out to you guys. Okay. See this. June 9th to January 20th. It's a 50% retracement. The big COVID move. That's the, oh, no, I'm sorry. Then it is the 127% extension. It was 127% extension of that move is what it was, if I'm not mistaken. Yeah, it was 127% extension of that move. So that comes in at 106 and a quarter. So that's going to be big. And I almost feel like I have to put this in bullish, but you know, and I know I've flirted doing bullish and bearish since we've been above this trend line here, this pink broken trend line. I mean, the thing is with yields going higher, it's like the dollar yen and the dollar Swiss are the beneficiaries, right? So I'm going to say while we're above 105.50, we just have to remain bullish near term. Dollar index. In the chat room, we were talking about how we had this nice little triangle broke out. Dale pointed out pretty succinctly, you know, the market's had a lot of time to sell dollars, and they just haven't been able to really push the dollar much lower, even based on how dovish Powell was yesterday. It's a great point and a great observation. So, I think support for the dollar index, it's just in case Powell really destroys the dollar somehow, we got to put in 90. Resistance is going to be 90.60 basically. Okay. And I'm going to keep it in range. Dollar Mexican peso found support at the 50% retracement. We have to get above this resistance here, which is 20.54. So there's 20.35 as support. And then after that, it's going to be 2060. You know what? Actually, I'm going to forget that. I'm going to do something really quick. I'm going to not put that down. I'm going to put down 2065, which is the 618 previous support up here. So let's be aware of that. Okay. Stocks are getting a little bounce at the open because they know that Powell's not going to be hawkish. So they're just buying stocks. US dollar, Norwegian krona. Big hold here of this. Remember, this is a broken trend line too, but it's the inverted head and shoulder pattern support. So that's going to come in at 840. And then resistance is 855, period. End of story. And that's going to be an asterisk because we really have to get above 855 for it to even consider being bullish. Dollar Mexican peso we already got. Let's go to the dollar yen. Oh, we already did the dollar yen. Let's go to dollar index. Excuse me. Oh, we did that too. What am I missing? Oh, gold, silver, Bitcoin, and S&P. Okay, I did all FX. Holy cow. Here's the S&P. So where do we get excited about the downside of the S&P? I would say right here. The overnight lows are maybe. Let me try something really quick. Wow, 10 years still pushing, huh?
It's getting there.
It is. It's pressing. So the 50% retracement is kind of this hourly low, and that's going to be at 38.50. So let's worry about 38.50 today, and then obviously 38.10. So because that was basically yesterday's lows. So 38.10. And I don't think 38.50 is a great support. I just think it is support. You know, it's not like huge support. Resistance is at 39. That's 39, and then 39.30, which will be, you know, up here 35 actually. Take that back. I'm taking us out of bullish, putting us in range. The reason why is because yesterday's price actions, you know, that's got to concern some folks that are long. You know, we slid, and you know, we're making, like I pointed out on the face webinar, we're actually making lower highs and lower lows. Okay. Let's go to gold and silver, which I have like zero interest in right now. Now, Stelios probably has some more interest in gold and silver, but not me.
And not at these levels yet.
Yeah, gold sold off pretty aggressively here. Okay, so 1815 support, 1780, and then obviously 1760. So let's write those two levels down. 1760, 1780, and then this is 1815, and I'm going to keep it in range. And silver, yeah, you guys can have fun trading this, because I know I've said that a lot recently with silver, but man, I don't have a whole lot of interest in it right here. So 28.44 intraday, 27 and change. We got a nice little intraday head and shoulder pattern here, but look, shoulder, head. That could take us right back down to 26 basically. So the 50% retracement is 27.12. So I'll write down 26, 27.10, and this is 28.40, 28.44, and we're in a range. Last but not least, Bitcoin resistance, pretty clear here. It's at 51.5. And I mean, you can see here on the hourly charts, right? This is just, you know, pretty clear resistance. There's also previous support over here. So stocks are coming off a little bit. Bitcoin's coming off. So we got to watch Bitcoin, because we're making lower highs and lower lows. So I'm not so concerned with yesterday's lows. I am concerned with 42,000, as you guys know. I will write down yesterday's lows. Basically, I'm going to write down 42 and 45,000. I mean, because that's it. 42K, 45K. All right. That's, and again, let me point that out. 45,000 is basically yesterday's lows, roughly. Okay. But I'm more concerned with 42,000. And if, you know, risk appetite continues to wane, especially after, you know, Powell's testimony, then, you know, these cryptocurrencies are at risk. So there's your bias chart. It's done. Stelios, can I let you take over for the next 5 minutes and I'll come back and join you?
Sure thing.
Thanks. All right, guys. So I'll be back here with Stelios in just a minute. I'm just going to take a bit of a break. Be right back.
Okay, let me take the screen. Hold on a second. And share screen. Desktop one. So I'd like to talk about many things. As we said before, the main thing that interests me is at the moment yields, because they're going to be the driver. And we're well into this zone, and we really need to hold below. Otherwise, the break of that is a big technical break, and I think equities are going to follow. And equities already are we saw this yesterday. They retraced all the all the sell-off of the morning, but still they're a little bit nervous, and they're definitely looking at that. I think commodities is one thing that we should keep an eye on. Oil. I was reading today headlines about $100 oil again, and I'm like, yes, this is usually the sign where we got to be starting to think that we're done. And look at obviously you have to exclude this spike low, the COVID spike low. That was driven by futures. It was a pure futures play when we traded at negative territory. But still, if you exclude the spike low, but still, this has been a really, really powerful move from below $20 to 62, and we're getting now to a very important resistance zone. And I think, given the global environment, oil has done a lot very fast. And yes, we have seen inflation, or we are starting to see inflation. And look at copper, what's copper doing and everything. So commodities are rallying, but look how far oil has gone. So I think, especially with those headlines now, everybody looking at, I read today $75, $80, and $100 oil. Yes, it's coming. It will come, I think, but I don't think this is it now. So I think we're getting to a place where it's a nice area to start accumulating shorts. At least I think that's what I'm going to be doing. And I think if we do finally get some kind of risk-off move, then this is definitely going to turn, and commodity currencies are going to drop. And as I said on phase one, even though I love Norway, I think dollar Norway is going to be my choice trade to be long as a risk-off trade when this happens. Gold and silver, talking about commodities, gold and silver. Gold is still on this what looks like a bull flag, but it's it's still going. I would love to get in the low 1700s to get some there, but I'm not touching it now. The silver is even worse in terms of what I want to do with it now. I'm long already from 2620-ish, and I want to add more, but it's just consolidating sideways now, as it has done for weeks. And it's very choppy, and intraday, of course, you can trade what you want, but I have a much longer term view, and at the moment I'm not involved. I will get involved if we get lower, if we get towards 24.5, and I will get involved a lot more if we get towards 22. I don't think we will get there, but we might do it again if we do get a decent risk-off move. I think that's feasible. Currency-wise, I said in the chat room this morning, for people who were there, I was talking about the pound, and I said, look, I think if you've been long the pound, so short euro sterling or long cable, it's probably a good idea to start taking profits. I talked about cable first, where we have this big descending trend line. This is multi-year, it's like a decade plus, and we broke here, and this was just before the Brexit agreement. And as soon as we got there and we broke, I said, look, guys, I think we're going a lot higher. It was 135, 134, 45, something like that. And look, we've come to this zone. And I definitely think if you've been long cable, you have to take some profits. And same with Euro Pound, I showed before. This is what I drew weeks ago, months ago, was it? I can't remember. And it's been an amazing move. And I still think we have a little bit more to go. But again, I think it's probably very wise to be taking some off because it's gone really quickly. And remember what Europound did and what cable did on COVID. That was it. I mean, look at this move in Europound during February, March. Yeah, February, March. It was from 83, went up to 94. I mean, that was just a huge move in only a few weeks' time, 2-3 weeks' time. So I'm not saying we're going to get the same kind of move as we did with COVID when it first hit, but you know how markets are, you know how vicious they can be. So I'm just saying be very careful because the pound does move with risk considerably, not like commodity currencies, but it does. And the big picture for me in the dollar remains the same. I think we're gonna get a squeeze, which will coincide with the risk-off move. If we don't get a risk-off move, none of this is gonna happen. I'm just saying I think this is now starting to become for me, the most possible scenario, we're overstretched in any metric, any way you look at it, we're really overstretched in equities. So there has to be a correction. And when that happens, I think the dollar is going to move. Because everybody kind of knows in quotes, that the dollar is going a lot lower. And I agree with that. I think in the short term, a lot of people are going to get caught wrong-footed. For those who look at cryptos, we've been talking about that. It's been an incredible move. And here we go. This is what Blake was talking about. It's kind of almost a confluence of the 38.2 retracement and those previous highs around 41, 42,000. I think if you want to be long Bitcoin, this is the place to be buying. I personally am not trading it. I just don't have the guts.
I'm with you. I don't have the guts to do it right here. But where I'd like to really own it, I mean, me and everybody else, I think, is somewhere in the 20,000 range, like 20,000, 25,000, somewhere down there.
Yeah.
Because that was the big breakout. That was the 2017 previous highs. And I think those are going to be the levels that, if we ever get a pullback in risk, or, you ever see people kind of turn negative on crypto for whatever reason near term, I think that's where I'll be looking anyway.
Yeah. And like you said, if we do get a risk off move, then Bitcoin is going to be on steroids downwards, most likely, right? It's been on steroids upwards, and I think it's going to be very much affected. So
yeah,
we might get that. We really might get that opportunity.
So what do you think, and what would you say if we get central banks creating their own digital currency? I think it's actually going to be bearish for Bitcoin and other cryptos.
I agree. I mean, the question is, the whole advantage, or theoretically the advantage of Bitcoin, is that it's something that's outside the banking system. There's nobody controlling it. There's this ledger, which every transaction is verifiable from wherever you are, etc. There's all these nice things, but the main concept of Bitcoin is you get outside the banking system. So if central banks say, okay, here's my digital dollar, it's not really the same thing as crypto. So I think it's going to be bearish, but cryptos have this cult following that I don't think it's going to go away easily. Obviously, if central banks do create their own digital currency, that's just going to be effectively, getting rid of notes, right, and stuff like that. So it's. I think you're right. I think it will be negative for cryptos, but cryptos have their own following, have their own fan base, and it's going to take more than that to really make cryptos have a very, very big drop. I think the thing that might do the trick is if central banks and governments, they start regulating cryptos heavily, they start taxing, exactly, or even wanting people to declare what they have, and all that, then the whole the whole privacy advantage just goes out of the window. So
yeah, and it's an interesting argument, because and this is like, you think a lot about this. You're like, okay, people go, well, the reason why I buy Bitcoin or crypto is I want to shield myself from the government, and I'm gonna, I don't want anybody to know what I have, and and the government is gonna say, okay, you have to tell us what you have.
Exactly.
What are you gonna do? That's it. I'm moving. Are you really? You're gonna uproot your whole family and you're out of here?
No, either that, or you take a risk and you don't declare anything, and then whatever happens, happens.
Yeah, right? And 95% of the people aren't going to leave. They're not going to do anything. They're going to do as they're told.
Yeah,
right.
And then the question becomes, what is Bitcoin? What is its use? Is its use to buy things? No, because at least not in a big scale, because of the constraint that we have with the transactions. How many transactions can be done per second? I mean, that's just a non-starter. So you can't use it to buy stuff. Obviously, you can use it to buy Teslas apparently, and other stuff here and there. But it's not going to be a major currency, let's say. So what do you use it for? You use it to store wealth?
I think it's store wealth, protect yourself from inflation. It's a gold. It's the it's the new gold. I mean, that's all it is, in my opinion. But let's also Mark in the chat room was just saying crude just hit a new high, and you can see crude is rallying here. Big move in crude. And we're approaching the 78% retracement again, the long term, 78% retracement, and also the longer term 38% retracement. So this is, in my opinion, a very, very big resistance that we're coming into around the $63 range. And what's interesting about that, if you take a look at like the crude sensitive currencies like the dollar Canadian is weaker, but it's actually well off of its lows. The US dollar Norwegian krona is, it's weaker, but it's well off of its lows. So what happens if crude stalls here, then you get some of these currencies that have not weakened or have not strengthened with crude, like Norway, and then you rally. So you were saying something on the Face webinar, Stelios, which I found very interesting, about Norway. What'd you say?
I said that if I want to play risk-off move, I'm going to play long dollar Norway, even though I love Norway and the currency. And I agree, it's going to be a double whammy. It's going to be oil and the dollar as well.
Dollar Mex is ripping, but yeah, look at this rally here in dollar Norway. Let's just think about this from let's do this. I want to do a calculation for you. 954 to 12. Okay, so let me show you something. 954. Now we can put stop losses anywhere. I don't care. 12. And let's just say you trade normal size. You just buy 100,000 in currency. That's a $25,000 move on 100 grand in currency. Right here.
For a currency, that's incredible. Yeah.
That's insane.
And it's just this pair just goes.
You're just trading half. You're just trading half of that. I mean, you're talking a $12,000 move on a half of 500,000 in currency from here to here. I mean, it's just insane. That is the scary thing if you're short Norway, and like let's say we get a move that looks like this. And you get a squeeze that's, let's just say a 13% squeeze, takes us back up to some of this resistance. All right. I'm just going to, do the math for you guys here from 850 to 960. So 850, let's just put 8 here. Whoops, that I don't want to do. 8, 960. I mean, that's a $6,000 move on $500,000 in currency. That's a big, I mean, yeah, you're buying 100K or $1 million. These are what Stelios is pointing out is if we get any risk off, the US dollar Norwegian krona is going to be a good risk off type of play. And I've been trying to play it. That's why I'm long, but I don't want to be super aggressive until we get above 855 to be frank. So that's,
I agree. And I think it's important to forget, I have biases, right? We all do. And I have a long-standing bias to be, I like the Norwegian krona, but on this, if this happens, just like you said, above 850, what is it? I can't remember the level. I'm going to be
855. Yeah.
855. I'm going to do the opposite, even though I think in the long term, we're going a lot lower. I'm going to do the opposite.
Yeah, I mean, you've got to be thinking that way, right?
Yeah.
By the way, the dollar Mexican peso really screaming back today. I mean, that was a 50% retracement. I'm still bullish dollar Mex. I've still got a position in there. I actually bought some earlier at 40, and I just sold it. when I'm telling you I'm buying and selling, I'm just buying, selling little pieces of it, just, you know, kind of trading around a core position, but overall really core position here. And I am looking for us to eventually break above 2080. It's the same situation as Norway. You don't want to be short the dollar Mexican peso in a risk off environment. And I'm going to make one last point before I go here. And I'm going to let you guys go. And Stelios, unless you got anything else you want to say, I just want to say that, you know, we've had every opportunity in the world to rally in equities. Everybody knows what we're going to get from Powell. Everybody knows. No, there's no secrets here. You know, we're going to get dovish, more liquidity. He's not tapering. No inflation. It's transitory. That's it. That's it. So everybody's had ample amount of time to take stocks higher, and they've had an ample amount of time to sell dollars. And it's not happening right now. So you got to think about that, right, Stel?
Oh, yes. Yes. If something can't go down, it's going to go up, and vice versa. Yeah.
So let's just think about that as we move into today. So guys, have a great day. Good luck today. And I'll see you in the chat rooms. And if I don't see you there, I'll see you there for the roundup, which is only 2.5 hours away. So talk to you soon. Thanks, everybody.
Thank you, Blake.
Thanks, guys.